What's going on, everybody? I hope you're all having a wonderful day today. We are back with another monthly portfolio update. I'm going to share with you how it's performed, as well as any dividend income that it's earned over the past month. If you're new to this channel, first off, welcome. I appreciate you. And second, I do portfolio updates every single month, really to give you complete transparency into what it's actually like to invest in the stock market, share the highs and lows, and really just take you along on this journey with the ultimate goal of achieving financial freedom in hopes that it can inspire others to do so as well. I personally believe that investing is a great way to build financial freedom, financial independence. It definitely takes a long time. It's not going to happen overnight, but man, it's just fun to do and I absolutely love it. So with that said, the current value of the portfolio here is about $41,640. If we look at the market gain, that's about $13,000 with about $4,000 in dividends. So when we put that into a money-weighted rate of return, that's roughly 97%. And so far, since the inception of this portfolio, which was back around 2020 when COVID started, technology has performed the best so far. So if we click into this pie here, which is essentially just where I group all of my tech holdings, we can see that Broadcom is up a massive 700%. A lot of other great returns in here as well. Apple, 113%. We also have Microsoft up 138%. So pretty impressive, honestly, to see triple-digit returns from a lot of these tech companies. I mean, Broadcom, honestly, it's just been killing it. And technology alone has certainly helped with everything so far. I always like to compare everything to an ETF that follows the entire stock market. So for example, I have this VTI ETF, which is a mix of thousands of different stocks, ranging from small companies to very large companies. But I think this is a pretty good indicator of where the market as a whole goes. So since this one's returned about 95%, I sort of put that as my baseline measure in that any individual companies that I have that are over this, I consider them to be beating the average. Any below it, obviously they're losers or just not as great. So that's sort of how I like to measure myself. Not sure if you guys have any ETFs and like to follow that type of strategy as well. Let me know down in the comments if you do. But yeah, overall ETFs haven't been performing that bad either. My biggest loser so far has obviously been telecom, and here I only have AT&T. They've been pretty shaky over the past few years, but they've only been able to return about 14%, and obviously I don't hold very much of them, only, well, even less than $500, so it doesn't make too big of an impact when you don't have a very high weight of something. But either way, telecom, AT&T, definitely the worst performer. Now, if we zoom in and look at the numbers over the past month or so, we can see that the month has actually been pretty good. The total market gain has been about $1,500 and dividends just shy of $100. But the money weighted rate of return, that equates to about 4%, so pretty good. The clear winner has been technology, almost a 10% increase in the past month. We really had Broadcom leading the pack, as well as Texas Instruments, 17% and 15% respectively. And Apple, a company that I absolutely love, still with an increase, but certainly not as much as some of these other companies. So pretty good month for technology. Industrials also had a pretty decent month. Genuine Parts Company and Fastenal were up over 7%. And as I mentioned before, the weight that a company has in a portfolio really does make a difference as well. Because if you guys can see, like this Genuine Parts Company, for example, in this industrial pie that I've created here in M1 Finance, it's holding about 32% weight. So whatever this company does, it's going to have a greater effect on what the entire pie does. So that's pretty good to see from these two companies. Caterpillar, that had a pretty nice return as well, almost a 10% increase there. A little lower of an impact just because the weight is a tad smaller, but nonetheless pretty good to see. And then telecom and energy have been pretty stagnant over the past 30 days. We can just check out energy here. but your standard electrical utilities like DTE and Consolidated Edison down about 1.6 and 5.3% respectively. Luckily, we did have EPD. They did perform fairly good, and the fact that they have a higher weight in this pie put us in the green, so got pretty fortunate there. But yeah, that's pretty much how the past 30 days went. If we look at the graph here, we can see that it started out with a pretty good increase in the early to mid part of May. Then we took a slight hit towards the end of May, but then the market picked back up into where we are today. So overall, a pretty good month. Now let's get into the stuff that you guys are probably more interested in, and that is the dividend income. All right, so we started off with $4.81 from AT&T. Then we got a couple payouts from Texas Instruments. That equates to $5.12. And as you guys just saw, Texas Instruments has performed really, really good. And one reason I really love this company is because they've been able to grow their dividend year after year by a pretty significant amount. They may not pay the highest dividend, but that growth factor is something that I think is very important, even more so than the actual dividend yield itself. Because I'll be honest, there's a lot of companies out there that attract investors just because they pay a higher dividend yield, but that dividend isn't always going to be sustainable. A lot of times those companies have to make a dividend cut, and generally the share price of those types of companies aren't very robust either. So I find it's better to look for companies that year over year are able to grow their dividend. To me, it shows long-term strength and stability, and honestly makes the portfolio a little bit more predictable, which in financial markets is better in my opinion. So that was Texas Instruments. Then we got a whopping payout of $26.71 from Enterprise Product Partners. Next is Procter & Gamble, $4.78 from them. Very boring company, but they make a lot of consumer products. You can go look in your bathroom, under your kitchen sink. Odds are you're going to see a Procter & Gamble logo on a lot of those. AbbVie is next at $6.80. Then we move into a real estate company. This is National Retail Properties. They paid out $10.66. Then we have another real estate company. This is Stag Industrial, and these guys actually pay out a dividend every single month. So this month they paid out $2.68. Then we go into Ally Financial, a fairly large bank. They paid 63 cents. And then very similar to Procter & Gamble, company that makes a lot of household products. Here we have Colgate. They paid $2.48. Then we move into Realty Income Corporation, another monthly paying real estate based company. If you're an investor who's been following dividends, odds are you've probably come across this company, as it is pretty famous for dividend investors, but they paid $6.39. Then we go into Apple, and they had a couple different payments here, which comes out to $3.23. Costco paid out $1.65, and this is a prime example of a company that pays a very low dividend yield, but they've been able to grow that dividend quite substantially, and they've been able to increase their share price quite substantially as well. A company that I feel people shop at regardless of economic conditions. Next we have Caterpillar coming in at $1.06. Then we have SPHD. This is a monthly paying ETF, and they paid $7.33. And to round out the month, $3.86 came in from Fastenal. And so when we add all of those dividend payments up, the total comes to $89.19. So certainly not too bad. Compared to this time last year, we were at $83, so roughly a $5 increase from that time, which obviously isn't amazing. I haven't been able to pump as much into this portfolio as I would like. Just a lot of expenses recently, mortgage, bunch of weddings to go to, all of that good stuff. So it's been a little bit of a slower year, but we're trying our best and just going to keep on trucking. And one thing I want to show you guys here, if you haven't seen it, I like to break these dividends down into different time frames just to see it from a few different angles. So what I do for this is I take the most recent 3 months of dividends, I expand it out for an entire year, and then break it down into smaller time frames. So I have yearly, monthly, weekly, daily, and hourly wages. And these are essentially what these dividends earn all the time, even while I'm sleeping. So it helps bring that passive effect more into play. So every single week, for example, I'm earning $19.76, which may not seem like a lot. I totally get it. Some of you may have a lot less. Some of you probably have a lot more. But I think it's just cool to bring into your own perspective to see kind of where you're at. Definitely helps keep me motivated and gives me more goals to shoot for. So I would encourage you to do something similar with your numbers as well. Kind of adds a nice perspective to everything. And by the way, if you do want this template that I'm showing you here, you can check down in the description below. I'll post a link to it, but you can just go to File and make a copy, and then you can save it to your own Google Drive. So yeah, that's going to wrap up the video. Thanks again for stopping by to check this out. If you did enjoy it, please drop a like. And if you want more content from me, consider subscribing as well. I would really appreciate it. Have a wonderful day. And until next time, take it easy.